Good evening, everyone. Welcome to Officer 24/7. My name is Niharika Walia Bhatnagar, and I'm with you with the specific area of CAIIB ABFM. And today we are talking about the specific area of leverages. Acha, before I continue further, everyone, first of all, please share the session, like the session, and don't forget to subscribe to the channel right away, everyone. It is super important that we do this. Okay, now what are we going to talk about today, everyone? Our topic for the day is leverages, which we talk about when we talk about leverages. What is leverages, everyone? When we define leverages, now leverages is a situation where you don't have money enough to expand your business. So what you do is you extend your working towards someone else. That means you are gonna talk to you are gonna arrange the funds from outsiders. That is what leverages is about. Okay. So when you lever the funds to someone else, that is called leverages. Basically, you are taking the funds from someone so that you can extend your business, you can speeden up your business. That is what we cover in terms of leverages. Okay, everyone, this is our channel JAIIB CAIIB English Medium. So go ahead and please share the session, like the session, and don't forget to subscribe to the channel, because it is super important that you share this particular sessions with as many people as possible, because our growth is definitely something that is operated, that is dependent upon totally you and only you, right? Chali everyone, let's begin with the session. What does the term EPS measure, everyone? A total revenue of the company, the net income earned per share of the company stock, or the total assets of the company, or dividend paid to the shareholders. What is earning per share, everyone? What do you mean by the term earning per share? When we define earning per share, earning per share is also called EPS. EPS is basically what? EPS is basically the earnings of that organization, which is made by them on what basis? This earning is based upon a simple theory that we are talking about, that is your earnings which are based upon the profit after tax. Okay? And yes, it also excludes the area of preference shares, because once you have paid to the preference shares, whatever is left goes to them. है ना? Because equity shareholders are actually called the residual shareholders. They get what is left after the preference shares are paid off. Okay? So in this case, what's gonna be the answer? The dividend paid to the shareholders? Nahi. Earnings is basically the total income earned. Dividend per share is basically dividend DPS. Dividend paid to the shareholder is termed as DPS. So in this case, what's gonna be the answer? The answer is actually B. The net income earned per share. Done, everyone? Now, let's talk about this point, the net income earned per share. So first of all, what you take the profit and divide it by, you take the total profit, and total profit is divided by the number of shareholders. Done, everyone? Next question. What is the primary assumption made when using the financial leverage? What is the primary assumption? In terms of financial leverage, one of the primary things that you assume means you keep everything there, but these certain things are kept as constant. The value generated by additional assets purchased with the debt will exceed the cost of borrowing. Acha. Next is the interest rate on debts will increase over time. Shareholders will not expect dividends. Shareholders do expect dividends. This just cannot happen. Huh? The company will not need to pay back the borrowed funds. This happens only in case of equity shares. That's the only place once the money has been taken or given, then there is no other problem. है ना? So then what's going to be the answer there? What is the primary assumption? See, financial leverage is basically a situation where you take money from the people for just one reason. You want to expand your business. है ना? That's the basic reason. You know you want to increase your business wealth, and if you want to increase your business wealth, there is only one way. That is, you work upon your basics. है ना? When your equity is definitely lesser, then you go for the debts. So let's look at the options. The value generated by the additional assets purchased with debt will exceed the cost of borrowing. Then next part is the interest rates on debt will decrease over time. वैसे the interest rate decreases, but this is not a primary assumption. Shareholders will not expect the dividend. This just cannot happen. Every shareholder wants dividend. They want some kind of returns, no matter what. The company will not need to pay back the borrowed funds. You have to pay back the borrowed funds only in terms of equity. You don't pay back. So this is wrong. This is also wrong. Two wrongs are there, and then interest rates on debt will decrease over time. Two interest rates on debt. No, this is also wrong. This is not relevant in terms of financial leverage. So in this case, the right answer gonna be A. Done, everyone? Chaliye. Let's look at the next point, everyone. What's the next question? Financial leverage magnifies the return on equity on the return on assets is higher than the cost of debt. Financial leverage allows the company to use borrowed funds to generate higher returns than would be possible with equity alone. What's the point? Okay. Return on equity is the money that you get back because you are putting your money to the business. Obviously, higher the return on equity, better it is for anybody. है ना? Next is financial leverage allows a company to use borrowed funds. It allows you. That's true. Because you cannot depend upon equity alone. Na. Your money can never be enough. When you start growing up now, when you realize that once a business grows up and up, it's not possible that you grow only on your basis. Then you need other people to join you and give you money as well. So I think when we talk about both the cases, return on equity is definitely more than return on debt, because in terms of debt, you pay a certain amount. In terms of equity, you don't stop there. Don't you think? Your working doesn't stop there. You are absolutely clear about that particular thing. If you take a particular loan from someone, you have to pay only the interest. But once you talk about your organization in terms of equity, once you start growing, and the equity shareholders have equal right that they look forward towards the income, right? This income is definitely required by everyone. Done, everyone? Chaliye then, let's move on to the next point. Excessive financial leverage can lead to financial distress and reduce the company's earnings per share. Over leveraging increases the fixed financial obligations in the form of interest payments, which can erode profit during adverse business conditions. Okay. Excessive financial leverage matlab excessive loans. If I take a lot of loans, one of the basic pressures is to perform well. That if I don't perform well, I might lose my business. So that's one particular truth about it, that it brings a lot of pressure on any organization. And it does, everyone. Till the time you don't really get enough funds, you'll always be in that particular dilemma that pata nahi whether I'll be able to grow further or not. Isn't it? So in this case, what's gonna be the answer? The next part is over leveraging. You try to take more loans, your interest rate would be soaring high, so your profits would definitely reach out to the negative point. Done. So in this case, what's the scenario? I would say in this case both are correct, because you need loans to expand, but once you get the enough funds, you should stop there. If you try to get into the you try to take more loans and then you work on yourself, you get into debt trap. Debt trap doesn't get you anywhere, है ना? So in this case, A is correct. A company with high operating leverage is more sensitive to changes in sales volume. High operating leverage indicates that a significant portion of companies' costs are fixed, making profits more vulnerable to fluctuations in sales. Everyone, when you try to increase your current sales of operations, that is one part. है ना? That is one part. Your operating leverage is linked with your current situations. A company with high operating leverage matlab you have taken loans to improve your current situation. You're not trying to increase your scale of operations, but whatever money you have or you have taken as a debt, you try to utilize it to the maximum limit without any wastage. So when you're trying to have a tighter working in terms of high operating leverage, the organization is having a total closed fist, right? So once you get into the specific area of extreme situations, what do they do? Everyone done? Then they say high operating leverage indicates a significant portion of the companies. It does. High operating leverage matlab you have taken major loans to keep your particular money within your pocket itself. So in this case, what's going to be the answer, everyone? The answer is A. It's absolutely correct. The person who's taking care of that organization, who has given birth to that organization, will always be more known than the person who takes over. Done, everyone. Can you see in this case assertion and reasoning both are correct? Next point, everyone. It says the degree of operating leverage measures the sensitivity of EBIT to changes in sales value. Everybody, let's look at this question. The degree of operating leverage measures the sensitivity of earning before interest and tax. Everybody, what's going to be the answer in this case? Everybody, what's going to be the answer in this case? The degree of operating leverage measures the sensitivity of EBIT to changes. Sensitivity matlab we're talking about the effect of multiple things just because of changes in one thing. Everybody, what's going to be the answer? The degree of operating leverage. When they say the higher degree of operating leverage means a small change in sales, it doesn't change the sales. It affects your ultimate profit. Huh? So in this case, third point is definitely out. What's going to be the answer, everyone? Both A and R are true. R is the correct explanation of A. Then the next part is when we talk about this area, it says A and R are true, but R is not the correct explanation. A is true, but R is false, and A is false, but R is true. See, when we talk about the degree of operating leverage, that plays a very, very important role. Operating leverage means when you are using funds which you have taken from others to improve or enhance your scale. So in this case, what do? You do the same thing. So in this case, both the points were correct. ठीक है? अच्छा everyone, here comes total leverage. To increase your working altogether, you will have to improve your current operations. You will have to expand your operations in the upcoming future as well. Both of these things combines the impact of both operating and financial leverage. Then comes the degree of total leverage, the sensitivity of a firm cash flows to changes in sales due to both fixed operating and financial costs. Basically, na, they say the total leverage is basically considering both your changes as well in terms of your fixed, matlab your the leverages that you have to definitely consider. That is your long term one as well as the short term one. Everyone, today I think most of the points were same. So in this case, even I would say both the points A as well as an R, these are all both correct. Okay. Next point, operating leverage is concerned with fixed financial costs like interest, and financial leverage is concerned with the impact of financial operating costing on the company's profit. Everyone, look at this question. Operating leverage is concerned with fixed financial costs. They are because these things are done on a regular basis. Then comes financial leverage is concerned with the impact of fixed operating cost. No, financial leverage is a stronger term, na. And that too for something which machine should be used in the business for a way longer period. Everybody, what's going to be the answer in this case? Operating is exclusively linked only with the fixed ones, or it's a broader term? What do you think is the answer? The answer is basically both are false. How? Operating leverage is not only linked with the fixed coverage. In terms of fixed coverage, you don't find it like this. You see, in this case, the point is whenever we're talking about the funds, you arrange your funds from outsiders. What's going to be the answer, everyone? Operating leverage and financial leverage. Operating leverage is concerned with the basics of life in terms of the business. In terms of life of business, someone who talks about the basics of the organization, how do they grow further based upon their current situation. They have limited funds, and how do they use those limited funds to work towards their goals. है ना? Done. So in this case, both are false. Everyone, what is the degree of financial leverage according to you? What's the formula? These kind of questions can be expected in the examination. They can give you questions based upon the formulas directly. They can also give you the questions on your not only the specific area of the formula but also the assumptions, and the questions can also be asked from the different elements. How are they calculated and what is the theory behind it? What's the formula for degree of financial leverage, everyone? EBIT upon country, EBIT upon EBT, then we have EBIT upon sales, or EBIT divided by variable cost. Everyone, what's going to be the answer? The degree of financial leverage when you take loans for your long-term decision making. That is your EBIT upon EBT. Everyone, let's go on and talk about the next question. Which of the following best indicates a business risk? Operating, financial, combined, or total? When we talk about compound, it already includes both the above ones. Everyone, what's going to be the answer? Operating leverage, financial leverage, combined, or you can say the last one can be total leverage. When we talk about the business risk is indicated by the operating leverage. If you cannot pay your day-to-day expenses, it's very, very scary. So it has to be seen and to be corrected right away. The answer is operating leverage in this case. Okay, everyone, that's it for the day. I hope this particular session was helpful, and if it was, then please go ahead and share the session. Before we proceed further, everyone, one more important thing. Gandhi Jayanti sale is going on since it is Gandhi Jayanti. So what you can do is, if you're planning to purchase our courses, then please do the same right away, because currently the sale is going on. In terms of CAIIB November 2024, this is our crash course. Look at this, our crash course is currently available at the major discount. Just use the code the Y541 and apply it. As soon as you'll apply the code, you will get it at 19599. So this is a very limited amount. This is a discount that is available, and you can get this particular offer at 3919 only. So then even 1% extra you can get if you download the app. Please make sure you are downloading the app right away and getting this particular benefit. So please check it out right away, everyone. Don't forget to use the code Y541 and get our crash course. It is starting